Of course, we're not really into legal stuff, and we sympathize with illegal things, but we have to maintain some kind of balance. So we have to have a strict control of the number of people, and there was a lot of requests for this presentation. Welcome. If you have to get out, close the doors behind you. And is it okay? The audio level is okay down there? Okay. Yeah?
Okay. Hi everyone, welcome to the 45th Milan Bitcoin Meetup. Hello to everybody who's watching us on streaming. I'm very happy because today everybody has a seat and we're going to start. We have the pleasure to have Tom Vays. Tom Vays is a researcher, consultant, and trader who focuses on the importance of Bitcoin as a technology for the economic freedom. He's an independent content creator for his blog, Liberty Life Trail, his YouTube channel, his podcast, Crypto Scam, and as a contributor of World Crypto Network, and a secret photographer for CoinDesk, but this is an inside joke. After studies in math, geology, and financial engineering, Tom has worked on Wall Street for 10 years as a risk analyst and is involved in Bitcoin since early 2013. Today he's going to do a presentation about Bitcoin speculation. After that, we welcome Federico Tenga, who is the COO of Chainside, an Italian Bitcoin startup that we are honored to incubate at BHP Network, and is going to do a presentation about fork wars, the history of block size debate, until the next New York agreement. And also he is the creator of these silly and insignificant stickers with the not UX. He's going to explain, and if you want some of the stickers, we have some of them here. And after that, Giacomo is going to moderate a brief panel between a supporter in some way of the New York agreement and Federico, who is against.
Super neutral.
Super neutral. Super neutral panel. No, it's going to be very interesting. So thank you for your patience today, especially since all the chaos. And I'm going to announce that next meetup will be on Wednesday, the 18th. Again, Wednesday. Attention, because this one is on Tuesday. And the guest will be Mark Hart, engineer at BitGo. So I think it's time for Tony. Please.
Hello, everyone. Thank you for having me here. Milan is great. I'm really enjoying it. I didn't know what to expect from the city, but I've really been walking around, and it's really awesome. So thank you. Okay, so thank you for that, the long intro. So I don't need to introduce myself. That's all been done. I do want to jump right into the presentation. I want to give you guys as much information as I can. You can find me on Twitter as Tone Vays. I'm very Googleable. And I have a couple of podcasts. I have too many podcasts that I'm able to keep up with, which is unfortunate. I am a contributor to the World Crypto Network. We do a little news show there every morning for like 10 to 15 minutes every morning to get everyone caught up on the news. My own YouTube channel is more focused on economics and trading, not only crypto, not only Bitcoin, I should say, but also traditional markets. And my most popular podcast that I started is called Crypto Scam, and people are very upset. I haven't done an episode in a couple of months. I kind of got stuck in the middle of the Ethereum Crypto Scam episode. It was going to be a 3-part series. I got part 1 done, but parts 2 and 3 seem to be taking a little bit longer. It's a complicated one. Okay, so what I want to talk to you guys about is Bitcoin, which kind of got lost in this whole blockchain / Bitcoin's bad, but the underlying technology is good idea. All throughout 2014, it was going to be the year of merchant adoption, and then 2015 and 16 came, and it was all about the blockchain. Turns out it was just distributed ledgers with better SQL administrators. And now we're in the world of ICOs, and this amazing idea that, oh, how come Amazon didn't think of charging Amazon stock to buy on Amazon? Or how come Netflix never came up with the idea of charging Netflix stock for their subscriptions? That's kind of the world we're in now. Maybe I'll get into that a little bit later. But I do want to get back to Bitcoin. I know it might be a little bit hard to see all the way in the back, so I'll try to be very descriptive. So what you see in front of you is the complete history of the price of Bitcoin from the middle of 2010 up until maybe about a month ago. I have it as 4,300, which is actually perfect because that's the price around right now. I am missing the peak to 5,000 and the drop to 3,000, but you wouldn't even be able to notice it on that chart. But I always like to start these presentations before Bitcoin. And I want to take you guys back all the way to early 1990s when the internet first came into existence. And a Nobel Prize-winning economist was asked, what does he think about the internet? And Paul Krugman famously said, let's see here, most people have nothing to say to each other. By 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machine. So he said this in a magazine, and he tried to back away from the comments saying that he was half joking, but he really wasn't. That was in 1998. Here's what another Nobel Prize-winning economist had to say in 1999.
So that I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill and hand it over to you, then there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will make it even easier for people to use the internet. Of course, it has its negative side. It means that the gangsters, the people who are engaged in illegal transactions will also have an easier way to carry on their business.
Okay, so that was Milton Friedman speaking about the internet in 1999, right. Unfortunately, he passed away in 2006, and he was not around to watch Bitcoin come into existence. I actually met his son at another event. We were both speakers there together. He's also a PhD in economics as well, so we talked about Bitcoin a little bit. It's very difficult to explain Bitcoin to someone, you know, of high stature. They really come back with very difficult questions that are very hard to answer. Maybe for some core developers, it's not, but for me, it actually was challenging. Okay, so Bitcoin comes into existence. No one really has any value to it in the beginning, and it's trading at around 10 cents. But then something interesting happened at the very end of 2010, and that came to us by way of Australia because of Julian Assange. In late 2010, WikiLeaks was cut off from all forms of funding. And a core developer, Amir Taki, suggested and said on a public forum, hey, bring it on. WikiLeaks should accept Bitcoin as a way of funding to keep their servers going. And Satoshi famously replied saying, no, don't bring it on. Bitcoin is still technologically very new, and we don't want this kind of attention. So in the beginning, WikiLeaks kind of listened, and they did not immediately accept Bitcoin, and that brought us into 2011. 2011 saw the very first real Bitcoin bubble, when the price went from $1 to about $30 in a couple of months. As it was going up, during the middle of it, one incident really helped drive that spike of the bubble, and it came out of my state of New York and one of our senators, Chuck Schumer. If you look really closely, I know you guys are in the front, and you look at the laptop, I wish I could play this video. I wish I can play the video, but it's not on YouTube, so I can't embed it. And this is Chuck Schumer showing the world how to use Silk Road in a 2-minute national video in America. He was very upset that there was a website where people can buy drugs. And he also showed people how to access the website by opening Tor. And he also explained Bitcoin pretty well by saying that's the currency that's being used. So that was a huge help in driving that price of Bitcoin to its high of $30. And then we saw our very first serious crash. That was a 98% correction. I was not around the space at the time. Maybe a few people in this room were. When the price fell from $30 to $2 for about a 97% correction in the price, something we have not seen since. 2012 came around, and this is where China started discovering Bitcoin. Prior to that, we pretty much had just one major exchange, Mt. Gox in Japan. But in the summer of 2012, Bitcoin was featured on the Chinese national channel, CCTV, watched by over 500 million Chinese, greater than the population of America. And that helped drive Bitcoin price again, and then there was just a couple of days where it crashed about 50% one more time. 2013 was a really interesting year. So in 2013, in hindsight, we now know what Willybot was doing. Willybot was doing this fake trading on Mt. Gox, driving the price up. I am still totally confused as to why they would do that, because there were two problems with Mt. Gox. One, they got hacked in 2011 for a large amount of Bitcoin that we now know in hindsight, even though the hack was fairly public and everyone saw the videos that took place in real time. Also, a few years ago, leaked emails came out that got published between Mark Arpellis and Jeff McCaleb, who he bought Mt. Gox from, and he apparently bought it with 80,000 missing Bitcoin, which at the time was only, at the moment of purchase, was only about $60,000 or $70,000. But other than Satoshi Nakamoto, no one really had 80,000. Making that $60,000 closer to about 40 million. So Mt. Gox was in trouble from the start. So I don't know what gave them the idea that making the Bitcoin price higher would solve their fractional reserve problem. Still makes no sense to me, but in hindsight, it helped drive the price from $12 all the way up. But to me, personally, the biggest incident of 2013 happened right here in Europe, and not very far from Italy. It was the events of Cyprus. This was the event that actually drove me to finally buying some Bitcoin. I heard about Bitcoin during the WikiLeaks debates from watching, alternative media, but I never had a reason to go out and buy it until this incident really scared me. I'm like, what do you mean they can just take everybody's money from their bank account? And that's what happened in Cyprus. When the bank shut down, they initially announced that they were going to confiscate or tax 6.75% from everyone, but if you had over 100,000 euros in the bank, they were going to confiscate 10%. It ended up being that they confiscated 47.5% from all the accounts greater than 100,000 euros. And I remember, during this time, this really worried me. I'm still working my Wall Street job next to quants and PhDs and other finance guys, and I'm asking them, doesn't this worry you? And they're all laughing. No, this can't happen here. This is only Cyprus. This can't happen here. So I wanted to look for an alternative, and I had already heard about Bitcoin. So that finally drove me to Bitcoin. And I was a risk analyst, and I already had lots of trading experience. I was always a trader on the side. And here I am, expert in finance, buying on the bubble to 250 and watching my position fall in value 75%.
Nice.
Exactly. Yeah. And then I'm sitting here going, okay, what did I just do? Aren't I supposed to be the smart one? So that was a quick education of what happens when you're buying on a bubble. So that was me buying on that bubble as well. And then it falls. And then now the trick is holding on, understanding why you bought it and holding on to it.
Yeah.
So the price kind of stuck around in that, $80 to $120 level until a little dip right here. In one day, the price of Bitcoin fell about 50%. We fell from about 120 down to just over $80 in one day. And that day was October 1st. Who remembers what happened October 1st, 2013? Silk Road. That was the day Silk Road got shut down. And that was a funny day for me personally because sometimes I wish I needed stuff from Silk Road because maybe I would have gotten into Bitcoin a lot earlier had I actually gone to that website. But that's just not something I ever did. People have a really weird view of Wall Street. They watch the movies like Wolf of Wall Street and some of the other ones. In all of my time on Wall Street, I was actually never in witness of people doing drugs, not even weed actually. A little different in the crypto space. But so that wasn't the environment that I was in. So for me, this Silk Road didn't matter at all. And all my coworkers were pretty much the same. And that day, one of my coworkers runs up to my desk that morning and just laughing at me. He's like, haha, Silk Road is down. What are you going to do with your Bitcoins now? Because they all knew I was into Bitcoin. I was the only one at the office. And it immediately recovered and started to go up for multiple reasons. Around that time, the U.S. exchanges are being shut down, and the Chinese exchanges have all this volume. I've always accused the Chinese exchanges of having fake volume, and eventually that was proven true. I've always been accusing the Bitcoin mempool of being spammed for years, and that's obviously, people wanted to see evidence, but sometimes things are just obvious. And at that time, the Chinese exchanges are coming up. The U.S. exchanges are shutting down, kind of like the Chinese exchanges are being shut down now. The Japanese exchange is coming to an end as we go into the final bubble. But I think the biggest driver of the bubble to 1,000 or 1,200, in my opinion, was the Senate hearings in New York in November, not New York, sorry, Washington in November, which seemed to have some positive light on the price on Bitcoin and in the future of Bitcoin. So going up is easy. What happens when you reach a bubble? And you never know you're in a bubble until it's coming to an end. It's really hard. It's also really hard to predict the top of a bubble. No one can ever get it right. But in hindsight, everything is easy. In hindsight, everyone's a genius and everyone will tell you how they got out at the top, when in reality about 3 people did. So the typical bubble chart is standard. You have your top and then you fall and then you think it's going back to normal and then all of a sudden you get the real crash. So I always ask the audience, so where on this chart is Bitcoin today? And the right answer is always it's somewhere over there on the left. We haven't really hit the mania phase yet, which I also hope is true. So we will see. But when things fall from a bubble, and I know this chart is hard to see for people in the back, but there's the blue line is the price of Bitcoin in a linear scale versus the horizontal scale on the big chart. And the asset in the background is silver. And I published this chart a while ago. It's hard for me to put the most recent one up because the price of Bitcoin is just too skewed on a linear chart now. But it fell in exactly the same style, and you can match up how it was falling following the bubble paradigm. It's just that Bitcoin was doing it 3 times faster, and sometime in the summer of 2015, it started to reverse and Bitcoin started leading. And now we also see precious metals are going up. So even though Bitcoin was lagging silver, it caught up, and now Bitcoin is leading, which makes sense because it's a lot easier to speculate on Bitcoin than it is to speculate on precious metals because you don't have to move around a rock, basically. Okay, so what happens when things are getting stressed? I mean, we all know the very basic economics, right? I mean, no one really needs to take an economics class, but it's, supply versus demand. The price is identified by supply versus demand. But when it comes to Bitcoin, what is supply and what is demand? Of course, we know the inflationary supply of Bitcoin. 80% of Bitcoin has already been created. Satoshi has, maybe 5%, 10%? Something like that, right? Add another 5 or 10%, probably permanently lost. In the early days, people would always, send them around, forget the keys. Still happens today, but in larger amounts back then. And so the mining supply is totally predictable, okay? But what people don't realize is that merchant adoption contributes to supply. When merchants do not hold on to the Bitcoin, and when merchants do not try to pay their employees and they do not try to push it up the supply chain, trying to get their suppliers to accept Bitcoin. When a merchant accepts Bitcoin and immediately processes it through BitPay, Coinbase, or whoever, it's basically being sold in the open market. And that needs to be countered by new entrants coming into the market. Demand, new users wanting to use Bitcoin. And in those days, back in 2014 days, I was debating people because there was a big tweet out of PayPal saying they were looking into Bitcoin. And I said that would be terrible. Imagine if PayPal integrated Bitcoin where every merchant that accepts PayPal could accept Bitcoin and not even know it. You may think it's great, but it's not, because PayPal will just immediately sell it on the open market. And I was arguing that this is the worst thing we can have, because then all of the early adopters in Bitcoin will potentially can start spending, and once the price starts going down, it creates a horrible cycle. So I kept saying the more merchants are adopting but not keeping the Bitcoin, the further the price is going to get driven down. And this was a controversial view at the time, because the price of Bitcoin was coming down from $1,000, and it was slowly coming down to 800, 700, 600. And I kept saying, well, the more merchant adoption happens, the more it's going to go down. And we ended up going all the way to 150, but I'll get to that in a little bit later. This is a more technical crowd. I'm not sure why I stuck this in here. It was part of a different presentation, but this basically shows that we had so much momentum in 2015 and 16, and this momentum would just get derailed by the big blockers. And it's very easily correlated with the number of nodes supporting big blockers. Like, Bitcoin would have momentum, and then here comes Bitcoin XT. At the height of Bitcoin XT nodes, the price of Bitcoin was at its low after it had already started to rise. And then as the nodes crashed, the price of Bitcoin goes up. Then as momentum keeps going up, boom, here comes Bitcoin Classic. At the height of Bitcoin Classic's nodes, the price of Bitcoin was dipping, going back down. Bitcoin Classic nodes collapse, price starts to go up. And then again, here comes Bitcoin Unlimited. At the height of Bitcoin Unlimited nodes and Antpool showing their support for Bitcoin Unlimited, boom, here comes the crash in the price. And this is just such an obvious correlation, and it's been frustrating me for the last year and a half. And the same thing with the scaling debates, which I guess we're going to talk about a little bit later. But it's very easy to see how the scaling debates, the effect that it had on the price as it continued to try to rise, in spite of all of the attacks on Bitcoin in order to, split it in half basically and fork it. But let's talk about demand. So demand is important. So this article came out on Cointelegraph because of just a group chat where I just decided to randomly state all of the use cases for Bitcoin. Because again, this is at the time, this was written in early 2016, and people are still saying we need merchant adoption, we need merchant adoption. And in reality, look, Bitcoin is the first thing of value that you can own, that no one in the world can confiscate from you if you properly secure it. Humans have never had anything that someone with a bigger gun could not take away from them. For the first time, Bitcoin gave you this ability. And some people still haven't realized that this is the case. Also, Bitcoin is censorship-resistant value transfer. Yeah, it's not as quick as some people want it, and yeah, it's not as anonymous as some people want it yet. And it's not great, but it's censorship resistance. And it's really important that just because they know you did something, the fact that they couldn't stop you from doing it is probably more important than the fact that they know who did it. Because just because they know who did it, I mean, look, we all know Big Vern stole the money from Cryptsy, go find him, right? Knowing someone did something is not as important as the ability to do it, okay? That's the power of Bitcoin. So I decided to talk about some of the demands for Bitcoin, like where's the demand coming from? And I know people in the back can't see it, so I guess I'll have to read it. I try to avoid reading some of these. I just let people read it. But the first one is donations to organizations people don't like. Example, WikiLeaks. The next one is purchasing goods that government doesn't like the Silk Road case. And remember, each of these things, they're different based on your country. They're different based on your jurisdiction. I mean, I believe that I think all drugs are legal in Portugal. So why on earth would anyone use Bitcoin to buy drugs in Portugal or Amsterdam? I mean, once this becomes legal, Bitcoin isn't that much of a use case. Same thing with gambling. I mean, I think in Italy, I'm walking around, there's gambling, there's no laws on gambling, right? Age, but it's legal.
Only state-run.
State-run. Like I'm in New York, I mean, there's no gambling in New York. I'm not even I'm not even allowed to gamble online. Being in the U.S. With Bitcoin, I can, right? So here's another use case. Also purchasing services that the government doesn't like. All the places I go through in Europe, there's all these red light districts. Well, not in the U.S., not in the Middle East. So in some countries, it's not a use case. In other countries, it is. I tend to skip number 5. People might get mad at me. You want to hide your assets. I separated 5 and 6. I'm not sure which one is worse.
How many times did you separate?
But so in number 5, it's protecting some of your assets from a soon-to-be spouse. And there's actually like... Yeah. Don't be on camera. I actually correlated this. It's part of the article. It's, I mean, the divorce rate is pretty damn high these days. And a lot of people do need to hide some assets before they decide to get into a commitment. But 6 and 7 are the important ones, especially 7. So number 6 is protecting your assets from government. And again, different jurisdictions. I mean, I'm here in Italy, but right by Switzerland. People seem to be moving to Switzerland to live there for tax reasons while coming to Italy. Also, as a U.S. resident, if I decide to move to Puerto Rico, I will not have to pay any taxes. But you kind of have to live there, right? So again, it depends on your jurisdiction. Bitcoin may be a use case, maybe not. But number 7 is the big one. It's transferring value cross-border. And this is something that has been done by gold for over 1,000 years. When the going gets tough in your country, you have to pack your valuables and leave. And you have always been able to do it with gold. Unfortunately, for those people that think they can still move it with gold, they might not have realized that metal detectors have been invented. And it's now has become very, very difficult to hide your valuables in gold, and more on that in a minute. So where do I think things are going to get tough? I mean, we all know like the Venezuela situation and how bad it is there. But the problem with Venezuela is this. everyone thinks that Bitcoin is so great for the third world, for the unbanked, for the Philippines, for the Venezuelans. Yes, it's great for them in small amounts. These aren't exactly prospering rich countries, but the first world is. Europe, US, Australia, people with money. It's the people with money that will need to hide that money when it's time to leave. And for the last several years, I have been picking on Europe because of the common currency. How many of you are happy with Italy using the euro instead of the Italian currency? Oh, no hand goes up. Okay, a few of you. Okay. So it's ease of use.
I was touching the floor.
Yeah. So I think the European currency, the common currency, is going to be a major problem. I'm surprised it hasn't already been a major problem, but the first time I did this presentation was in February of 2015, and I specifically said when Greek banks fail later this year, and they failed about 4 months later. I've been expecting the Italian banks to fail for like a year and a half. I don't know how you guys are managing to like weasel out of it like twice already. I honestly don't know. Like, people want me to admit how wrong I've been about Ethereum over the years. Like, I'll admit I've been wrong about the Italian banks before I admit that I was wrong on Ethereum. I've really expected you guys to have a bank holiday, right? And but if it's not Italy, you have Spain and Portugal and France. I mean, Germany will only keep bailing you guys out for so long. It's not going to keep happening. I was in Germany doing this presentation as well. So sooner or later, the common currency is going to go. And what happens is, when you have the situation like in Greece, once the Greek banks shut down, it's too late for them to buy Bitcoin. They're standing online trying to withdraw 20 euros. But the next European country that has the bank holiday, all the other neighboring countries are going to rush into Bitcoin while they can. That's going to be the real driver to push the price of Bitcoin up. It's not the people in Venezuela that are buying $20, $30 worth of Bitcoin, even if they're buying it at 3x the price. It's going to be the guy with 100,000 euros in the bank saying, hey, I need to put this into Bitcoin because that neighboring country, their problems might be here tomorrow. And that I see as the real driver. And if the going gets really tough, people are going to move. That's what happened throughout history. And one of the drivers that forces people to move is more and more laws on money and more taxation. So I have a few examples. Here's an example in the US. Some US states are even putting in taxes to change residency within the country. My Airbnb case was interesting. I was using Airbnb for a while. It was great. It was so much cheaper. It was so much easier. And then one day I'm going to speak at a Bitcoin conference in South Carolina, and I'm like, whoa, why is my room higher? I know what it's supposed to be. I'm always using Airbnb. And all of a sudden, all these taxes showed up. Like 4 or 5 taxes. They're raising the price of my Airbnb by 20-25%. I heard about your value-added tax here, which is absolutely crazy. Maybe I should add that into my presentation for later. But another very interesting thing happened during the Airbnb realization that they've added taxes. When they did that, they completely rewrote their terms of service. How many of you read your terms of service before you agree to them? Right, no one.
Terms of service?
No, I had one hand go up once, and I asked them, how did you make it to the meetup? So when I saw that terms of service, I saw that the scroll bar was a little too small. So I did a Control-A, Control-C, yes, I'm on a Windows machine. Control-A, Control-C, Control-V. I don't store any Bitcoin there, it's okay. I use good wallets. And I pasted it into Microsoft Word, and then I'm waiting for it to count the words in this document. And I'm like, wow, that's taken a while. It came back with 55 pages and 33,000 words of Airbnb's terms of service, something I've been using for a long time. And then you start to compare it to other famous documents. Okay, well, Airbnb terms of service, 33,000 words, 3 years ago, by the way. The U.S. Declaration of Independence, only 1,300. The U.S. Constitution, with all of its amendments, kind of, sort of still follow that. That one was less than 8,000 words. I love the EU regulation on the sale of cabbage being 27,000 words, almost as big as Airbnb's terms of service. And the Satoshi Nakamoto's white paper was only 3,500 words. So you can kind of tell how things are getting out of control. I hope people in the back can see this, though people from the moon can probably see this. So this is, the laws are getting a little too complicated. So this is one of the legislations out of the United States. This is one of the bills that was passed recently. Anybody want to take a guess? It was in the news a lot. This is one of the laws that one of the bills that got passed in the U.S. Obamacare, yeah. It's about 33,000 pages, and it's a 7-foot stack of paper, which nobody read, obviously. It's like the terms of service, right? So laws are being passed that no one really knows what's in them. And just like what happened with the bit license when it passed in New York, and okay, well, what do you do? Well, Volturo decided to do something. They gave you a very simple, short disclaimer. I confirm that I am not a resident of Iran, Syria, North Korea, or the state of New York in order to use Volturo, which is a way to convert gold into Bitcoin and back into gold. So these laws come down to one major thing, and that's what we all call the war on cash. It's happening with Europe. I know you guys still have a 500-euro note going around that they're seriously trying to eliminate. In the U.S., they're looking to eliminate the $100 bill, which they're going to have a major problem with. And one great study was written by Harvard Business Review, described perfectly why the government wants to eliminate cash. And they talked about the major reasons. So the first one is, without cash, government would be able to set any interest policy that they like. You wouldn't be able to withdraw from the system. Negative interest rates are not effective when people can take their money out of a bank. Switzerland was the first to do negative interest rates. Germany tried as well. They're basically charging you money to keep your money at the bank. But if you can withdraw that money, you can exit the system. So they can't really implement negative interest rates as long as there is cash. Also, if there's no cash, there's no run on the bank. All those pictures of people lined up at the bank, at the ATM machines, they would no longer exist. It wouldn't be there. Like, if there's no cash to withdraw, all of those pictures go to the history books. The pictures from 1929 are the same as the pictures from Greece. Ones are in color, ones are in black and white. But they're exactly the same. You can't have a run on the bank without cash. But the major one is all of these governments think that we are tax evaders. And if only, we all paid our taxes, they would solve all of our problems. Of course, this is somewhat true in some countries more than others, particularly India. The research shows that the Indian government is missing out on 30 to 45% of GDP because of the cash economy, and people are not paying taxes. This is probably why India was the first one to try and remove cash from circulation. They also did a graphic showing how much it costs a country to maintain a cash economy. And you can see Europe is all in red, meaning that it's very expensive for countries in Europe to maintain a cash system, which I'm not exactly sure why, but this has to do with, keeping the counterfeit out of the way and just maintaining a cash economy. So they did one more where they tried to analyze, so the countries up here in the upper right, Germany, France, and Belgium, and Italy is actually down there. That's kind of surprising. You guys are next to Mexico, so I'll talk about what this is in a minute. So the countries all the way in the upper right, the countries on the right side are the ones that will benefit the most from the elimination of cash. The countries at the top are the ones that are technologically ready to eliminate the cash. So France, Germany, and Belgium, and somewhat Spain, would benefit a lot from the elimination of cash, and they're also technologically ready. India is the least technologically ready, but they would benefit the most from that elimination. You guys don't seem to be technologically ready, about as technologically ready as Mexico, which is a little weird, but yeah. So you can go check out that Harvard study on cash. Here's an example from France where you have to identify yourself even if you're spending 1,000 euros in cash. You have to provide an identity. An example out of America, and I'll just read it. This is one of the states passed the following law, which obviously nobody follows, but you're about to hear it. A second-hand dealer shall not enter into any cash transactions in payment for the purchase of junk or used or second-hand property. Payment shall be made in the form of check, electronic transfer, or money order issued by a seller of junk. So if you wanted to sell your bicycle for 20 euros or dollars, this law says you are breaking the law. You have to use some form of a bank payment. And this is where Bitcoin comes in real well. Here's an example from Germany. Germany decided to pass a law. So here it says, the amendment not only aims to combating illicit traffic in cultural objects in Germany, but at limiting ways of funding of terror organizations that are more and more financed by illegal excavations at archaeological sites, as well as illicit trade in cultural material. So according to Germany, they want to know exactly what collectibles you have in your house. Of course, the laws are being passed under, we're preventing terrorism, but in reality, they want to know what you have of value. Germany probably knows this well. During World War II, especially people in France, used to, you buy your wine, you hide the wine, you buy art, you hide the art, you build extra cellars. They're aware of this very well. So if the going gets tough in Europe, they need to know how much that painting on your wall is worth so they can tax you on it. They love taxing property because you can't move your property. That's why you get taxed on it. Same thing. If they know you have a painting on your wall worth $10,000, they can pass a law saying, well, you have to pay 3% of that painting to us every year, or 10% of the value of that painting every year if you want to have it, or you got to sell it. So anything over 100 euros worth of collector value, they want registered with the government. So what happens? So this is, and people just get frustrated and they move. So here's the population of Rome. I got this slide from Martin Armstrong's economic blog, which is very good. I like his work. Haven't had too much time to read it. And he did research on the population of Rome. Population of Rome peaked in 400 AD at 1.5 million people in Rome. But because of their very expensive public sector, there was a problem. Everyone always makes fun of national debt, like U.S. national debt is 20 trillion. And everyone's like, oh, that's a problem, that's a problem. I don't see that as a problem at all for two reasons. One, the U.S. can kind of just print some money. And two, who's going to come and collect America's national debt? No one even knows who they owe it to. So who's going to come to America and collect it? And no one. No one does that. But here's the problem. It's not the 20 trillion in national debt. It's 120 trillion in unfunded liabilities. These are all the promises that politicians have made to government employees. Pensions, medical insurance, things like that. And the same thing was happening here in Italy and Rome with all the soldiers policing the world, the Roman soldiers. They promised them pensions, they promised them medical care, and the government couldn't deliver. Instead, they just debased the currency. So what happened was all the soldiers just came back and they sacked their own cities and they stopped protecting the city. And then, from the outskirts, others came in and started attacking Rome. And people just moved. And the population of Rome collapsed. And then once again, you have your typical bubble chart. It's like, oh, we're coming back. And then, no, we're not. So the population went from 1.5 million down to just 20,000 1,000 years later. And then it started to recover in the 1400s. It started to go back up. And that's what worries me. I always like traveling to third world countries. Like, I love going to Vietnam, Thailand. I'm going to be in Colombia in December. If I can get a visa, I'll go over to Venezuela. Probably not the smartest thing I'll be doing, but I'll do it. I need to see things on the ground. But the most interesting one was Vietnam, which is the Socialist Republic of Vietnam. Socialist People's Republic of Vietnam, something like that. Still a communist country. But here's what I immediately noticed. Like, all the businesses are booming. Nobody cares about the government. The government doesn't actually owe people anything because the people don't trust the government. So when the government check bounces and doesn't clear, I would rather be in Vietnam because nobody would notice. But in America, half the population, probably in Europe as well, are somehow dependent on a check from the government. And I'm not talking about people on welfare. I'm talking about, even the police and the firemen and the medical people and all of the government agencies that you have. Everyone's relying on the government paycheck. And it's going to be the teachers and the firemen and the policemen out in the street trying to get back what's owed to them, just like the Roman soldiers came back because the government didn't follow through on their promises. So, and this goes back to gold, because now custom forms are asking you, how much gold are you carrying? How much gold jewelry are you wearing? And gold is identified by a metal detector. And this is where the Bitcoin becomes an amazing value transfer cross-border. Here's two publications from TechCrunch. One was before the banking shutdown, and it says why Greece should not switch to Bitcoin. And one after the Greek banking shutdown that says Bitcoin provider Qubits aims to help Greeks move their money. So that's basically the economic case. I am, of course, a trader and a technical analyst, so I will just close out this presentation with some of my price predictions on Bitcoin, which is something I'm slowly becoming more and more known for, which may not be the best responsibility to have. But here's an article from Cointelegraph. It's written in on August 31st, but not this year. This was written August 31st of 2014. So this article is now over 3 years old. And in this article, I wanted to do something different. Everyone always predicts Bitcoin price. What's Bitcoin price going to be at certain points in the future? Again, I'm a big reader of Martin Armstrong economic blog. I don't know how many people here are or have heard of him. And he's big on time analysis, not price analysis. So I used the very basics of his model, and I tried to pull out, well, what are some of the critical dates in the future of Bitcoin? Not price, but dates. And I came back with, well, June 16th, 2015 is a critical date, but August 14th, 2017, and I wrote in the article 3 years ago, something big is going to happen in August of 2017. And I wrote this 3 years ago, and I had no idea what it could have been. And for like the last year and a half, I was saying, well, I don't know what's going to happen this August, but it's going to be the biggest thing Bitcoin will ever have. And anyone remembers what happened that August? We finally got SegWit, guys. And the previous date where I listed something interesting is going to happen in about a year, because this article was written a year ahead of the June date. That was within a week of the Greek banking shutdown, which I still think turned the tide from a bear market to a bull market. So I do videos and I tweet out charts like this, and I'm a chartist. And earlier today, those of you that were at the other seminar, you saw me do a presentation teaching people how to read these charts and how to make these charts. So when we started, people hated me all 2015 because I kept saying my analysis is saying that Bitcoin's going to keep going down. I actually expected it to fall lower. I expected it to fall to about 110. It only fell to about 150. And the reason I expected it to fall lower is because I had my analysis saying, well, we should turn in the summer. But the low came a little bit early, so it screwed up my analysis a little bit. Ever since then, I have been bullish, and I remain bullish. We're actually a little higher than I expected us to be by this time, or a lot higher than I expected us to be by this time. But I'm still short-term bullish. I don't know, I have a very little time left, but these are just some of the tweets that I've written over recently, just this year. When the price was falling from 1150 when we made the new high, and we fell back down to 900, somebody tweeted out, it's a perfect buy. I replied saying that's not a perfect buy, it's a decent buy, but 750 to 775 would be the perfect buy, and that's exactly where we hit, and then people acknowledged that call. Early in the year, I only expected us to go to about 2,000 this summer, and then pull back a little bit, so obviously we're way above. But if you look at those of you that are in the front, you see this arrow going up, and here's what happened with the price. The arrow hasn't changed, and there it is, completely blocked by the price, and we actually went higher. I like to draw these red lines because I tell people, once you start to fall, you're going to come back to where the previous top was, and it happened here and here. We just missed it here, but then it happened again. This is why I was able to call 5,000 as a take profit in real time, and also the low. Here are some of the recent ones. My recent buy call came right there at 28.50. This is a tweet where I said buy Bitcoin based on technical analysis at 28.25, which was right there, and we pretty much went straight up to 5,000. Some of the other calls, when we started to go down, I put levels with a star right there when we were falling from about 3,000, and we started to fall down to 1,800. The tweet concluded with this arrow saying, hey, it's time to buy, and I happened to get that one right as well. But the coolest one, and I'll finish up with that one, is right here where I tweeted out, it's now or never for Bitcoin in my perfect buy zone of 2950 to 3000. This happened a few weeks ago. Next level is way lower if Bitcoin fails at 3000. But this was a big buy point, and Max Kaiser replied, thanks, Tone, I got filled at 29.90 for the $3,000 fill. I don't have my latest charts here, but follow me on YouTube, follow me on Twitter, and I send those out pretty much almost every day. I do something in relation to the price. I'm not always going to get them right, though. Lately, it's been a good luck streak. All right, guys, that's it for the presentation. I guess the alarm is telling me that I'm done, which is perfect. All right, thank you.
Thank you very much. I think we have time for a few questions, like not many, 3 or 4 questions, and then we move to the Federico's presentation and to the panel. So, questions?
Just give them the mic.
Yeah, I will pass them the mic.
People come up.
People?
So you think a bubble obviously is possible in some time, short time, long time? We don't know.
So, sorry, Tom, let's collect 3 questions so you maybe are more easy to respond, or you prefer?
No, one
Okay.
at a time is better.
But
One at a time.
okay. So the feeling I collected is also that this is a technology that comes in progressive usage, and there are transactions that increase steadily. So could these transactions be just related to the price in long term? So have short bubbles, but steadily increasing of the price long term.
No, I got it. I got the question. So, look, the price of Bitcoin will go up and down, and sometimes it will go down and up. The point is, like the internet itself never actually had a bubble, right? It was companies building on top of the internet and the unreasonable valuations of those companies. So to me, Bitcoin is an amazing technology. And usually when the price goes out of control, there is some kind of, I don't want to say manipulation, but like what happened with Willy Bot and some of the other things that were going on then. There was also some liquidity issues. Right now, do I see a bubble in the price of Bitcoin? I think we're still okay, but we will reach a level where the price is going to have to come down and reset, and you want the price to come down and reset. Now, where do I actually see a bubble? I think the ICO space is insane, okay? The next time, if I'm invited back here, there'll be a completely different presentation because I'm starting to put together a presentation comparing the 1990s dot-com bubble with the current ICO bubble because there's just so much similarity there. I learned to trade right after the dot-com bubble, and the biggest takeaway, the traders that were teaching me how to trade, they were talking about these stories, how they were trading stocks on the NASDAQ that were worth over $100 a share, $200 a share. Companies were worth millions, even into the billions, and there was nothing there. It was just a website. They didn't even have a developer. One story some company went IPO public on the NASDAQ. It opened at $30. By the end of the day, the value of the stock was $240 in one day from 30 to 240. This was on the NASDAQ. This is what I see now in the ICO space. I don't think any of them will make it. Like, none of them. I haven't seen anything useful coming out of the ICO space. How big will it get? I have no idea. It's still a fraction of what happened during the dot-com days. And yes, some of those companies made it out, but notice how none of those companies were creating their own money. They were still using the dollars for their services. So that's where I see the bubble. I see the bubble in altcoins. I see the bubble in ICOs especially. How big will it get? Nobody knows. The question is, what happens when it pops? Will it bring Bitcoin down with it? Or will the pop of the ICO bubble drive all of that capital into Bitcoin? Of course, most of them will lose it all, but some of them. Bitcoin isn't that liquid. When the ICO bubble pops, the money starts to flow into Bitcoin, it can drive the Bitcoin bubble. So we can see as the ICO bubble pops, governments can come in, they can declare them all illegal, whatever, and then all of a sudden Bitcoin goes up 20, 30, 40 times in a matter of a month or 2 months. That becomes a bubble, right? So, and that can end badly for Bitcoin. Or, like what happened in China, they declared ICOs illegal, but Bitcoiners panicked. And I immediately said, this is crazy. Bitcoiners shouldn't need to panic. Who cares? So if Bitcoiners panic with the ICOs, then Bitcoin will correct. But if the ICO panic drives the price of Bitcoin, that could be an insane bubble. Something to keep in mind.
Thank you. Another couple of questions, and then we move to the next one.
Thank you very much. I understand that one of the biggest issues for having a massive adoption of Bitcoin and accepting payments is the volatility of Bitcoin. At least this is my personal feeling, because I always see it as this amount in euros will be converted instantly in Bitcoin, but I don't see Bitcoin having a value that can relate to an object right now. So what do you see in the future as an evolution from about volatility? So will more adoption make it lower? Are there any improvement that can be done in order to reduce volatility?
Good question. So now that we have SegWit and Lightning is starting to get developed, this should be a lot cheaper to send small transactions. So as the price of Bitcoin continues to rise, small transactions will not be affected. Your cup of coffee in the future, if the price of Bitcoin is moving, if one Bitcoin goes from, $10,000 to crashes 20% to $8,000, your $1 espresso paid in Bitcoin, when that transaction fee is tiny, is almost non-affected at all, right? So you're going to see this adoption happening in smaller and smaller, on smaller and smaller items. And as the value of Bitcoin continues to rise, slowly more and more expensive items will be insignificant due to the value of the price of Bitcoin. So it's going to happen from the bottom up, in my opinion. Also, in my case, for example, I do all my YouTube videos, everything is free, I don't have services, I don't have a company, but people still have a lot of questions. So I charge people a consulting fee. My consulting fee is 0.1 Bitcoin an hour. It was 0.1 Bitcoin an hour when Bitcoin was $1,000. It was 0.1 Bitcoin an hour when Bitcoin was $5,000, right? I'm denominating an hour's worth of my time as 0.1 Bitcoin. How long will I keep that going? I don't know. Would people pay $1,000 an hour when the price of Bitcoin is 10,000? I don't know, but I'm going to find out. But so far, like the amount of calls, I don't get that many calls, but it's steady. So it's like its own spam filter. So some things will start to be denominated in Bitcoin. And one more thing I believe will help with some of the stability. People always say, well, all these altcoins have an advantage because they're so cheap. A Bitcoin should redenominate, and the most likely one is bits. We would go to bits. And people have asked me, how come you don't talk about pricing things in bits instead of Bitcoin? And my answer is people have a hard problem thinking more than two numbers to the right of the decimal point. But when one Bitcoin is above $10,000 or at $10,000, one bit is 1 penny. Then we can go to bits, because then it will be easier, because from that point on, 1 bit is 1 penny, and then hopefully we can get to 1 bit is $1, and that means Bitcoin's $1 million each, right? So you got to be real careful about changing notation. You got to do it at a perfect time. And I think you will see people like me with a big YouTube following push for bits notation, but only after we're stable above $10,000 a coin. And that should help drive it higher, because now people will be more comfortable with something that they're used to in terms of price. Thank you. And one more.
Yeah. Another one?
Thank you. I couldn't help but notice that there is a sort of a theme that is underlying all your presentation, and it seems like what you expect for the future is a sort of economic crisis, or definitely an economic collapse, since all the examples that you made basically refer to this type of scenario. Do you think that something like this is going to happen sooner or later?
I do, and it seems to be happening later than sooner. So the one difference between me and I guess a lot of the normal people that are calling for the market crash, everyone always talks about a market crash in terms of stock prices. Stocks are going to crash, stocks are going to crash. I'm very bullish the stock market. I've been bullish for years. I see it more as a bond issue. The stock market, yeah, the stock market is up, but the bond bubble and the debt bubble has been growing like crazy. So I do see a major, I guess, economic disaster on the horizon, mostly having to do with over-socialist governments and too much dependence on government and the demonization of the private sector. In the meantime, people are scared of putting their money with the government because they continue to confiscate it. And more people are putting this money in the safety of the stock market. Because Google isn't going anywhere, Tesla isn't going anywhere, right? Amazon, I'm expecting Amazon to control all shipping around the world. I'm expecting Netflix to pretty much control all of the live streaming. Google is going to be driving all your cars. Tesla will probably make a lot of those cars, right? So I think the stock market has a long way to go up because people will trust those companies. I always have these debates with people in smart contracts, and I make jokes. I'm like, well, why can't you use a spreadsheet as a Google Doc for your notarization? Why do you need to decentralize who's opening your apartment, with key. Just put it on Google. Put it as a Google Doc. And they're like, yeah, we can't trust Google. And I'm like, really? You trust them with your life? You use their GPS. They're going to be driving your car. You trust Google with your life to get you from point A to point B, but you're not going to trust them with, keeping track of the data. And everything in there is documented who changed what. So I see the private sector doing really well. It's only the small space that doesn't trust these companies. But yeah, so I do see major economic problems, and hopefully, like my future for Bitcoin is this. This is also my argument against things like Monero. I don't want to see fungibility at the protocol level. I want to see fungibility and anonymity as a layer on top, because I want, in the future, if there is a political crisis and we change for the better, I'm hoping that someone would go into the government and put all tax revenue on something like Bitcoin without the fungibility, so we can see where our tax money is going, so we can see how all the public employees, how much they're making, how much tax revenue is going where. But as a private citizen, you have a layer on top of the protocol that gives you anonymity and fungibility, but not at the protocol level, and hopefully we can get the governments to use the underlying non-anonymous layer. And that would help a lot. The biggest problem isn't money printing. The biggest problem is politician promises of money to people and their employees and stuff. And that's the part that's going to end badly.
Any questions? No more questions? Okay. We're going to prepare for the next presentation. Just 1 or 2 minutes. And we are ready to have Federico to talk about the history of the block size debate.
A big applause for Toon. Here we are. Guys, some chair is free now, so from the back, if you want to come closer for the next panel presentation, you can. So come in the forward.
Thank you. So, hello everyone, I am Federico Tenga. I work for Chainside, a Bitcoin technology company based in Rome. And tonight I'm gonna talk about a little bit of Bitcoin history, in particular the fork wars. So, yeah, thank you. So, what is the problem we're talking about? Due to its structure, its architecture, the Bitcoin blockchain has a limited amount of transaction that it can support on chain. So this is the main reason why we had so much drama over the past years. And this is what we call the block size limit. Originally, it was 32 megabytes, but Satoshi decided to lower it down to 1 megabyte. It didn't justify the decision. It didn't even tell anyone. The few people that noticed it asked Satoshi, and he said, please don't say it loud because we want to prevent spam attacks. Here we can see that the commits where he decided to change the size to 1 megabyte. So, was it supposed to be temporary? Some people argue this. It was just a temporary measure to prevent from spam attack. But the thing is, if Satoshi wanted it to be temporary, he could have done it. You can just do a software that blocks bigger than 1 megabyte are invalid for let's say 100,000 blocks, and then is back to 32 megabytes, and we can choose another limit. But he put it in a way that it was going to be there forever. So probably he didn't say anything about that, but probably he didn't want it to be temporary. He really wanted it to be 1 megabyte. We don't know why, but yeah, he had the reason, probably spam attacks or other reason that we will see. Block size debate is something that has been around for a while, much earlier than people think. Already in 2013 we see Boston Bitcoin talks about that from Peter Todd, but then the debate hit up mostly in 2015 when we had Gavin Anderson starting to suggest to increase the block size to 20 megabytes. For him, it was something very important, but not everybody agreed. So, like, it didn't really work out. It wasn't implemented into Bitcoin Core. Yeah, people like Matt Corallo really didn't really show disagreement with this decision. So, let's see what was the problem with the block size increase. First of all, why would anyone want the block size increase? There are a few pros: more transaction on chain, so more people can use Bitcoin, and cheaper fees. So we don't have to pay like $2 or $3 to do a transaction like we do today. So there are good reasons to do that. From some cons is the block relay becomes more slower. There's more latency that will cause more monetization. There are like ways to like make latency lower, like fiber or other protocols, but still bigger blocks is slower propagation. But more expensive to run a node. We want Bitcoin to be decentralized, so we want nodes to be cheap, so everybody can run it. So this is why it's important for the block size to stay lower. And it's not even a long-term solution. We are not going to have like a Visa transaction with the block size increase. We need like blocks like 1 terabyte, so it's not going to solve anything. So it's a real solution. So first work, season 1, Bitcoin XT. Bitcoin Core wasn't going to have a block size increase, so let's go with another implementation. We have these two guys, Gavin Anderson and Mike Core. Bitcoin XT was already there before the block size debate. It was made by Mike Core in 2014, and it was originally intended to support the Lighthouse crowdfunding platform. So it was already there. Mike Core was always supporting a block size increase. So that's why Gavin Anderson proposed an increase on XT, and it was like merged into the code base in August 2015. And a few weeks later, the first version was released. That's when the block size debate really started to become something public that everybody in the Bitcoin space started talking about. We had a censorship on forums, so the community started splitting at this point. What was Bitcoin XT about? You needed 75% of the block mined after the beginning of 2016 to activate this protocol upgrade. And initially the increase would have been to 8 megabytes, doubling every year. So eventually in 2036 you will have get to 8 gigabyte blocks, which is kind of something that we never tested. It could be problematic, so people weren't really enthusiastic about that. So, long story short, the experiment failed. Michael was really upset about that, so he decided to leave Bitcoin and join other projects. So, meanwhile, something else happened. Segwit was born as an alternative solution for Bitcoin scalability. What was the problem that Segwit was trying to solve? The signature in Bitcoin transaction can be slightly alterated and without invalidating the signature. So you have the transaction that is still valid but is slightly different. So what's the problem? It means that the transaction identifier is different, which is not a problem for a single transaction. But then when you have a transaction that is pending an unconfirmed transaction that is being validated, the transaction becomes invalid. So it could cause double spending, and it blocks layer 2 solution and bidirectional payment channel, which is a very good way for Bitcoin to scale. So this show in 2015 the malleability attack were like something very big, so you couldn't just ignore it. It was like really an issue. So the idea of Segwit was to separate the signature data field from the other part of the transaction in a way that the signature doesn't account for the transaction identifier. So whatever you do with the signature, it doesn't change the TX ID. By the way, it also increased the block size about like 2-4 times. So it it's already like a compromise for people that want a bigger block size. Not everybody is happy about that because people that didn't want a block size increase, now with SegWit they have it, but yeah, never mind, it was a compromise. But the idea at the beginning was like, yeah, this is good, but you kind of need an offer for that, right? Maybe not. Was something that was discussed between the two Scaling Bitcoin conference in 2015, Montreal and Kong, and there are some Bitcoin core developers. In particular, you have Eric Lombroso, Luke Jr., and Sipa talking about how you could implement SegWit with a soft fork, doing something similar to what was already done with P2SH. And this was later presented to the public at Scaling Bitcoin 2015 on Kong. So yeah, it looks like we have a solution. We can even implement a better version of Lightning Network with that. So yeah, sounds good. But now we have Force War Season 2, Bitcoin Classic. The first compromise, Bitcoin Classic, was born like a compromise. Okay, we have a great solution like work in progress, we have SegWit, we have Lightning Network, but let's buy some time to develop the solution, but without having like congestion on chain. So let's increase the block size limit to megabyte. It's not a big deal. It shouldn't cause like a huge latency problem. It shouldn't like make the cost of running a node higher. So should be fine. Buy some time, but still, what's the problem? An R fork is required. And what's the problem with the R fork? Like with the R fork, there is a huge risk of splitting the chain, and it's something that you really want to avoid to keep like people confident in Bitcoin that it can be reliable. If the chain splits and you actually have two coins, it's kind of like difficult for people to understand, and then you need to upgrade the node. And maybe if you don't really follow the space that much, like many of us do, you miss something. So it's kind of dangerous. Something that it was never tested at the time, and so it was kind of people weren't so enthusiastic about that. But then something happened. Bitcoin Classic died with the Hong Kong agreement. So some miners, some core developers get in a room and decide, okay, let's agree that we will release SegWit by April 2016, and we will work on a code for an R fork available in July 2016. And if everything goes well, we will do a 2 megabyte R fork in July 2017. And this was kind of, okay, we solved the problem, everybody agreed on something, so it looked like the situation was solved. But then we go to Fork War Season 3, SegWit Virtuous Unlimited. SegWit is finally released in October of 2016. It's merged into core. Yeah, good. It's also implemented in alternative implementation of Bitcoin, like Bitcoin Nodes and Bitcoin. So yeah, it looks like everybody is okay with SegWit. It requires 95% of hashing power to activate, which is a lot, was the main problem to activate it. And miner will start signaling it in November 15, 2016, which should be a couple of weeks from the release, and we'll see how it goes. Expect it to be activated quite quickly. But not everybody was like a fan of SegWit. Somebody really didn't like it. Like these guys at VFBTC, which was like a newborn mining pool with enough hashing power to block SegWit activation, that they think that if something smells like shit, you don't have to test, and they really didn't even want to test SegWit. So looks like SegWit is not going to be activated if these guys keep blocking it. And what is the alternative? Why people block SegWit? We need another scaling solution. And here we have Bitcoin Unlimited. What is Bitcoin Unlimited about? User can set their own block size to accept blocks and produce blocks. They may even accept some invalid blocks if there is enough work, depending on the situation. And there is absolute block size of 32 megabytes, which is like, I'm not going into detail into this, but it's still an R fork. It is very complicated to agree which is the right block size for the network, and you really risk to split the network a lot. So it's not that good solution now. So it's not long term because you still have this 32 megabyte limits, and still block size is not going to solve scalability. So yeah, it's an alternative, but not that good in opinion of many people. So let's see how it's going. Who's winning? January 4th, Segwit has been like around for like 6 weeks now, something like that, and it's 20%. It's not doing that bad, and Bitcoin Unlimited is behind just 13%. So yeah, nobody's going to get activated anytime soon, but Segwit looks like it's winning. Whoa! 1 month later, Bitcoin Unlimited is winning 22% versus 22.2% of Segwit. So yeah, something weird is happening. What are miners doing? Wasn't the Hong Kong agreement about activating Segwit? Looks like the Hong Kong agreement wasn't valid anymore. So yeah, now let's see what happened. 2 months later, Bitcoin Unlimited is really going to win, like 43%, 44%. Segwit is growing, but it's left behind at 31%. So looks like we are going to have an hard fork. Yeah, maybe. Fork War Season 4. UASF and the New York Agreement. So people really wanted Segwit, like so at least a part of the community was really into it. So there was this proposal from the anonymous developer Shaolin Fry about a way to activate Segwit without forcing the miner to activate it. The user have the power to activate, not the miner. This is like this idea. So let's set a flag day for activation. And from that day, nodes start refusing blocks that don't respect the new rules. So what it means are not the miners to set the rules, it's the economic majority. It's a new concept, kind of cool. So then like BIP 148 came out, and what BIP 148 was about having this flag day set on August 1st, 2017. From that day, nodes that agree with UASF will start refusing blocks that do not support Segwit, that do not signal for Segwit. It has kind of a good community support, but no major exchange declares support for it. So it's not really clear what is going to happen on August 1st. There is not an easy way to test if there is enough support for it to win. So everybody is asking what is going to happen. Is Bitcoin to split? Is Bitcoin price going to crash? I have to sell my Bitcoin. I have to buy. There's a lot of confusion. It was just a few months ago. We had like a meetup here about that. Meanwhile, Segwit is activating on Litecoin. So Segwit is actually working on some other currencies and is doing pretty well. It also had the price of Litecoin to go up a lot in a few months. So yeah, maybe it is a good idea to activate Segwit, at least if you are an holder and you want the price of Bitcoin to increase. So this is something that start pushing people to kind of like Segwit a little bit more. Okay, maybe I don't understand if it's a good technical solution, but it's going to make me rich. So yeah, why not? So New York Agreement, how to solve this situation? Yeah, looks like after Consensus 2017, Barry Silbert, CEO of the DGC, organized a meeting between CEO of Bitcoin companies and miners. They agreed to activate Segwit 2x. That was like a proposal from the RSX developer, Sergio Lerner. It was just about, okay, some people want a block size increase, some people want Segwit. Let's do the two. Like, what could go wrong? Like, everybody's happy, right? Yeah. It requires an effort for the 2x part, so not everybody is happy. So yeah, this is what I agree. Let's activate Segwit with like 80% of hashing power, and after 6 months we have the 2 megabyte output. It was supposed to be a compromise to make everybody happy, but not everybody is happy, unfortunately. So yeah, there are some people that are really not going to follow the New York Agreement. They start with the Bitcoin independence. They think they really like, no, we really want Segwit with UASF, and that is what is going to happen. So probably we're going to have a chain split if like miners don't activate activate SegWit before like August 1st. Meanwhile, Bitcoin Cash was born, also known as Bcash, BCH, BCC. He has a brand new logo, another new logo, another new logo, another new logo. Great. And what is Bitcoin Cash anyway? It's 8 megabyte blocks, no SegWit, we don't like SegWit, and there is this weird emergency difficulty adjustment that if there is a very low hashing power that make blocks slow, very slow, we just like don't wait for the 2000 blocks difficulty adjustment period, we just like lower it before to like make the network work. And it really has some community support, like we have to admit it. It's not like something that was just decided by a few CEOs. It was like some people really wanted it. There is some community out there that like really like Bitcoin Cash. Meanwhile, yeah, Bitcoin is going to split. We have like USF, Bitcoin Cash. We have like how many splits are we going to have? Yeah, luckily this guy James Hiller proposed with BIP91. Managed to find a way to keep the USF guys and the New York Agreement guys on the same chain. So thanks to this proposal, you can activate SegWit using the SegWit 2x like activation without like splitting from the UASF node. So yeah, it works. Like BIP91 locks in July 20 of this year. And a few weeks later, mission accomplished. We have SegWit. Great. Everybody's happy, right? Now we have what like people wanted. We have SegWit, everybody's happy, and we are even going to have a block size increase in a few months, even better, right? But no, first war, season 5, not 2x. Some people really don't want this 2x hard fork. So what is the problem with this 2x? Why people don't want it? SegWit was already a block size increase, so we don't really need another block size increase just right now, maybe later, but no, there is not really a need. Okay, yeah, it's block size increase, it takes time because you need people to start using SegWit, but it's growing. Like now I think already almost 3-4% of the transactions are using SegWit, so in a few months it's going to be relevant. We already have a lot of blocks that are bigger than 1 megabyte. Another problem, there's not enough time for us to upgrade. Like it's just like few months. People like even if people agree, even if it was merged into core, people just don't upgrade that often. So it's gonna cause a split anyway. If you really want to do it, you need more time. You can't just do it in a few months just because you want to. It's like an open network, so you can't force people to upgrade. And there is a high risk of chain split. And maybe it's not really worth it. Why we are even doing this? Like why we are risking like Bitcoin, which is like something so valuable for all of us, just to have a slightly like block size increase when we are already having one right now? What's the point? We are going to have like Lightning Network when like hopefully in 1 year or something. So we are getting some scaling solution. We don't need like we have both some time to find better ones. So what's the point? And maybe the point is that it's mostly political. Like if you CEO can control Bitcoin, sounds good if you're a CEO, not so good if you're not. So yeah, some people like really have a reason to go for that. So some people decided to put a list of companies that actually do not support the 2x hard fork. DHB is one of them, Chainside is one of them, and there are like other 70 or something in that list. So like not every CEO wants that, just like those that were in that signed agreement. And even those that, not all of them still agree with that. Like Bitwala, like after a few weeks, like decided to not support anymore SegWit 2x. F2Pool decided that they're not going to mine SegWit 2x after the hard fork. And they say, yeah, we even said it before, only until July we're supporting this stuff, so don't even complain about this. Then some people even started to send subliminal messages to try to make people be against the 2x hard fork. And other people maybe fishing for attention, try to produce some sticker to like make the community go against Segwit2x. So this is like where we are right now. The hard fork could be in a couple of months. So yeah, we will see what is going to happen. Thank you.
Instead of collecting questions right now, I will ask Tone and Federico to sit here. Basically, since we are very neutral and balanced, we will have two positions represented. Federico, as you guessed from the presentation, is going to argue for the no 2x position, while we have a known big blocker anti-core guy, which is Ton Vays, representing the pro 2x position. So we are super open to dialogue and debate, and not at all, I mean, we are super neutral. I will be the super neutral moderator. So I would like this debate to be mostly your questions, so we can finish this very, very long but very, very interesting meetup. I will just ask them to give a super small pitch for their position. Then I will ask one question. I will get there maybe 3 to 4 questions maximum, and then you're free to get drunk finally. Let's start from the no 2x from our. No, I'm the moderator. Let's start from the one of the two positions. Federico, why are you and your company, like mine, against the 2x hard fork?
Well, like I think that people that signed the agreement really had good intention, like to avoid a chain split and activate Segwit. That's what everybody wanted. But the thing is, now it's something like very risky that could split the network. It doesn't have like any measure advantage. It's just not worth it.
Thank you. Now,
so it's not exactly that I'm. My Twitter handle still says no 2x, and we at the World Crypto Network, I believe, started the movement of no 2x. But the more I think about it, see, I thought that the Bcash thing was crazy, and I thought it wasn't going to go anywhere. But I was wrong. It's still hanging around, and it's not a threat to Bitcoin, but it's an annoyance. And I think that if there is a 2x hard fork, it's like two of Bitcoin's enemies are going to be fighting each other for hash rate and arguing with each other more. So I think that if there is a 2x hard fork, it's going to make both of them less irrelevant than currently Bcash is trying to cause problems. So I think it'll be better for Bitcoin in the long run if you have these two insignificant things versus one trying to be significant.
That's so balanced and neutral. Thank you. So my first question, then we'll just collect yours, is starting from Federico's presentation, very, very complete and very, 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 very insightful. You say that initially Bitcoin had a 32 megabyte block size, and that Satoshi is not really clear what Satoshi intended when he imposed the 1 megabyte anti-spam block. One could, I've heard some objection on two sides about this. The first was that Luke Dashier said that actually because of the database implementation of Bitcoin, the block size was actually under 1 megabyte, something like 700K. Do you have any insight or comments on this? And the second objection on the other side is that actually Satoshi said on a blog post that we can easily, he said, actually phase out this limitation. For example, when blocks is measured than, and he said, and he named one example block, which was actually way in the past, we can just make new max block size higher than max block size. So somehow Satoshi hinted to a hard fork deployed max block size increase. I would like your comments about this, and then we'll collect questions. Federico?
Yeah, like maybe it's true that Satoshi was okay with doing like an hard fork, like to increase the block size when like it was needed. But yeah, I don't think it's that relevant, because I don't see like any good way to do such an artwork and keep all the network together. Like at the time, when Satoshi was still around, it was possible. So like he even did like I think 1 or 2 artwork without anybody noticing. So yeah, maybe at the time it was an option, but I believe that now like it's not an option anymore. Or maybe it is an option, but it's just too risky, and like Bitcoin is kind of risk adverse, so it's not something that fit the value proposition.
Well, I don't remember those exact times, but there's a couple of things I can add on that block size increase and why a lot of people don't want it, is because it actually increases propagation time. Once a miner mines a block, that block needs to be validated by other miners, and that takes a few seconds, somewhere between 10 and 20 seconds on average. And a lot of miners don't want to wait another 10 seconds. So they immediately start mining on top of another block. And this is how we get empty blocks. So the fear with bigger blocks is that we will have more empty blocks, and there'll be a bigger gap in time. And in addition, a miner that just mined a block now has an advantage of mining the following block, leading to more centralization. I heard that was another reason, especially Peter Todd, I think, was explaining that one a long time ago, that gave us a smaller block. And it's kind of crazy how people take the words of Satoshi Nakamoto from back then as, you know, what's best for the system. Because I try to explain to people, when they say Gavin Andresen, well, Gavin Andresen knows best. He was the first. You know, he was the guy Satoshi handed the keys to. And like, that doesn't make him, you know, the best developer for the job. I always say to people that tell me, I'm like, yeah, but if you find some village in the middle of an Amazon or in Africa that never had a doctor, a Western doctor, you will be the best Western doctor they have. It doesn't make you the best Western doctor. So as the skill of the people in core got better and better, you really got to trust these guys. I mean, they know what they're doing. And some of them probably have a better idea on how this should be safely done, even better than Satoshi did back then, because things change. A lot of things are different now.
Thank you. So, question from the audience. Only the brave still here. You.
Could be that Litecoin is actually the real long-term solution. So at the end, in Bitcoin, there is a war, and Litecoin is the real solution for the long term. So this
because it's more peaceful without all the scaling drama.
Faster and lighter. I don't know.
Yeah, of course. Like if your network is more centralized, it's easier to implement like protocol upgrades, but that doesn't make Litecoin like any better of Bitcoin. Like maybe like if if Bitcoin didn't activate SegWit, now Litecoin would have a huge advantage to be the bigger chain with SegWit. But still, like the fact that upgrades can be implemented faster, that like doesn't really make it like maybe the network like faster, more efficient, but it makes it less secure.
Again, the reason why it's so easy to implement all these changes on these old coins because no one's using them. If someone was using them, it would be just as hard as it is in Bitcoin. Litecoin also has, you know, the Charlie Lee problem where he's still seen as the Satoshi of Litecoin, where Bitcoin doesn't have that. But the bigger issue is economic. For me, I think the easiest thing for people to switch these days is, let's say, browsers, right? I know people get comfortable with their browser, but in reality, switching browsers is no big deal. After that, messenger apps. I have about 15 in my phone that I actively use. Like every country has like their own preference, right? So switching messenger apps is simple. Even social networks, we're all kind of stuck on Facebook, but it wasn't that hard to switch from, you know, MySpace to Facebook. When it comes to money, it's different. Bitcoin is the only chance for digital store of value. Now, we can say that maybe Litecoin one day will be a better transactional currency. And I didn't think that was possible, but I was recently explained that it's going to be very difficult to go beyond the $100 million split of a Bitcoin to a Satoshi. If one Bitcoin gets very valuable, one Satoshi becomes a little expensive. If Lightning channels aren't all we expected them to be, there may be some use cases for another alternative, but only as a payment method, not as store of value. There's only one shot at store of value. If people switch over to Litecoin and the store of value property is lost, I mean, people like me that have been fighting for Bitcoin for 4 years publicly, all my money is gone. And there are people that have way more than me. Like, I'm not even that rich at all. So if that store of value property is gone, that's it. No one will trust another cryptocurrency with their store of value. It'll be like, how fast can I sell it to buy my thing? And it's the store of value that gives Bitcoin the majority of its value.
Thank you. Questions? You have one? No. Okay. Just approbation. So, okay, I asked the last one. Still related with altcoins, not related with block size, not directly. So, how long can the market be completely irrational? So, Ethereum is listed on Tom's Crypto Scams episode. He even took 3 episodes to list all the scammy parts. We all laughed about Ethereum. Still, it's not like a 6 months fad. It's like a 2 years growing investment preference with a lot of big companies backing it. So for us, in this case, the panel is not neutral. We're the 3 of us are mostly maximalist. So how long can the market price scams as valuable as Bitcoin? If what Tom says is true, can the market go on like this for other 2 years, pricing Ethereum like it was something actually technically sound, or there is a higher limit to madness?
Okay, so like my opinion is that if you're an altcoin, it doesn't automatically mean you're a scam. So maybe your value proposition is not store of value, which is not the value proposition of Ethereum. So this is I think like the value proposition of Ethereum is not to be the most secure chain out there. It's to be like flexible and to host like a lot of use cases. Most of them not so useful, but yeah. Anyway, so I don't know how long it will go, but I still think that Ethereum may collapse like any time in the next few years, but there will still be like another altcoin like trying to give the same value proposition. Something like very flexible, not so secure, but you can do like a lot of stuff. So for a Bitcoiners, Ethereum may not be that interesting because the reason that like get people into Bitcoins are like not those that like not the value proposition of Ethereum. But I don't think there will be Ethereum will last forever. But I think like something Ethereum, there will always be something Ethereum-like.
So I think it can go on for a while, but I'm the kind of trader, like I want certainty in my trade. Like even though I think it can go on for years, and you know the Bitcoin's market cap versus all other can fall to like 5 or 10%. And that doesn't mean that Bitcoin isn't going back to 90-95% when the bubble pops. But when it pops, nobody knows. And because I know what these altcoins are underneath and what these ICOs are underneath, I won't touch them. Like even if there's money to be made, I'm watching these 15, 16-year-olds make fun of me because they are buying their brand new cars. And I don't touch it. Because when I know something is either a scam or is inefficient or and they tell me, well, you were buying this stock and that stock, Enron ended up so-and-so and I was working at Bear Stearns and look what happened. I mean, yeah, but that was perfectly legal. The reason why I think it can go on for a while is because what really helped drive the dot-com bubble was the invention, not the invention, but the ability for a person to become a trader from his living room. Prior to E-Trade, Scottrade, all of these online dot-com brokers, prior to them, the average person couldn't trade on his own. You know, there had to be a broker, and those brokers actually had laws on them. I mean, they were stretching the laws, but a broker couldn't call, you know, some shoe salesman and try to pitch him the latest IPO. Even if you look at the movie Wolf of Wall Street, they were selling penny stocks, but they still had a list of people that had, you know, real jobs, and they had to sell it to people with some money. The creation of these online brokerage places where everyone could become a trader. You know, the taxi driver is like trading IPOs from his living room, when he's not driving a cab in the morning. You know, you take the night shift, and then you're a trader in the afternoon. The crypto space took that to another level. They dropped all regulation, right? There's no more jurisdiction on country. Like, you have to be an American to trade American stocks. You don't have to be of any country to trade the ICOs, the old coins. No age restriction at all. Like 10-year-olds can do it, right? People in third world countries, once they get internet, they're like, oh my God, I can make money. So can this speculatory bubble get like 10 times bigger, 20 times bigger? Absolutely it can. Nobody knows when it's going to pop, but I know it will, and I'm staying away from it because with my luck, just like I bought Bitcoin right at the top of the 250, that's what's. But I know this one ain't coming back. That's the big difference, right? With Bitcoin, I had confidence it's going to go back, not the ICOs. So, so that's kind of my view on it. It can go on for a while, but I am staying as far away from it as possible.
Thank you. So, if there are no other questions, I will officially free you all. Let's get drunk and eat kebab next year. And you can actually have this
object of desire, not to access stickers. They are very rare, very neutral, of course, neutral. I have got something of them, thanks to Federico, so come to me if you want some. But we are still very neutral. Okay? See you next time, and thank you for your patience, thank you for everything. Thank you, Tom, of course. Thank you, Federico. Thank you, Giacomo.